Good morning. Unfortunately, there's not much in terms of price happening today. This was kind of our weekly goal, and we reached it. So as you can see, the market's kind of been chopping around. Yeah, I almost didn't log on this morning, just because you can see how pre-market played out. Yesterday we reached this weekly goal. Then in pre-market we just came down and we kind of swept liquidity to the sell side, swept liquidity to the buy side, and then just kind of like re-entered this range, came down in 830, swept liquidity again for 830, and now we're just back in between this dealing range. And it's kind of similar to what I was saying yesterday. Excuse me. After Powell speaks, when you have liquidity sweeps on both ends, and then you're in this range isn't huge, but like relatively to how much fluctuation there is. When you have little fluctuation and you're in the middle of this like a swing high and a swing low, there's not much you can do in terms of trading. I mean, that would be high probability. You'd be guessing a lot. Unless you had like a higher time frame next objective that you could build out a narrative for. Like we could build out a story about this daily fair value gap, but this one was kind of our target for the week. ICT mentioned this, I guess, last weekend. Maybe it was a little longer ago. It's this inefficiency. And then this right here is an order block. So we have a pretty large hourly order block sitting below what we delivered on the target. That makes me not really interested actually in going short. Because we could easily come down to consequent encroachment of this order block and then reverse. So yeah, I feel like, this week was a tough one. I think I took, look, I took one trade this week on the YouTube channel, and that trade, it was a small loss. But this hasn't been a week that the delivery's been super clear or super easy. And, it's good that we took just that one trade. Don't try and force it, because there will be easier weeks. Possibly tomorrow. Probably tomorrow. I mean, not tomorrow, next week. And there's no reason to build up a losing. Put your account into more drawdown. the dollar, dollar hasn't done anything obvious either. We're still visiting this daily fair value gap. Took liquidity yesterday on the daily. These equal lows. So I like the dollar going higher into next week. Maybe I'll make like a end of the week little review video and talk about next week. I don't know. I think I'll probably wait until ICT finishes up because he's been doing that. So I'm not gonna, there's no reason to try and make a video over him. NASDAQ doesn't have much of a clear sign of liquidity either, which, you know, usually NASDAQ prints out a little better than ES. NASDAQ doesn't have anything. Probably this blue area was that same hourly fair value gap from ES. It was fair value gap right before the new week opening gap, and we delivered to it. We delivered to it a little earlier on NASDAQ. It came below it, but the next thing for NASDAQ is this weekly volume imbalance. So that downside objective kind of lines up with this daily fair value gap for ES right here. I don't know if I could see that in the cards today. I feel like for NASDAQ that wasn't too far. It's not too far for ES either. But again, with this hourly order block right before this fair value gap, with it being the end of the week, I don't know if I'd want to try and take a trade to that, because this zone could have been enough for the market to just want to do nothing now. Yeah, I think it'd probably be better just wait for next week's price. Again, looking at the 5-minute, there's nothing clear about this. Looking at the 15 an hour, there's no clear low or inefficiency that I think is a high probability draw. So probably best to preserve capital today, and just watching how it's printing right now. It looks like it's going to be one of those days where it just kind of meanders around. You know, you might have like a macro kick in and it'll run for liquidity and then meander, but you can kind of tell by how we took sells in the morning. We took buy side, we took sell side, and then like the way it moves, it just wicks. Like you see all of this overlapping, and then even on the retracement, so it's trying to go down right here, but if you notice when it retraces, you know, it's big candle down, big candle up. It doesn't want to leave any inefficiency. Then kind of meanders down, 2 candles down, 1 candle up just to cover up and leave no inefficiency, meanders down. So it's kind of like it's just on autopilot, like doing a thing, you know, might take this sell side and then kind of meander up, but it's not super tradable. For downside, again, I see the mean threshold of this hourly order block. And for upside, not much for upside. For upside, it would have to be like this inefficiency from yesterday that lines up with this new week opening gap. And then remember the rules. For the silver bullet, you should have at least, you know, like we aim for the low hanging fruit of 5 handles, but there should be 10 to make it high probability. And ICT hasn't been super clear on this, but this is how I like to think about it, because I feel like it's more high probability. So if our sell side liquidity is right here, and we have a fair value gap right here, it's 5 to that fair value gap, but I wouldn't just go, oh, but it could go lower. That's 10 of probability. Like, yeah, that's just like, and it's doing that right now as I say it, but you would want your draw to be 10, at least 10. Like you'd want to have some significant level that's lower than 10. And we kind of outlined this mean threshold, but I'm not super keen on it. So that right there was the silver bullet for the session. I'm okay with not trading it. again, we don't have a trending dollar. There will be trades that possibly play out today, but I don't think they're high probability enough for the YouTube channel. So imagine if these were equal highs. So you have these highs here, you have these highs, but if this didn't come and take liquidity here, and these were equal highs, and then we came up above and swept some liquidity, like some equal highs, that would have been a setup I would have liked. I think, we did start this downside for liquidity because we did take this 5 and 15 minute high. So if it is in like a choppy range like this, your best bets when you're trying to figure out a direction are wait for 15 and 5 minute highs, and more like significant, like in intermediate term 5 minute high to be taken. So this is an intermediate high because it has a short-term high here and a short-term high here. So we took that intermediate term high, and then which made a new intermediate term high, and then it can run for the sell side. And you can argue the same thing. So when price was down here and it was 8:25 in the morning, this right here is the intermediate term high, and this is an intermediate term high because we have short-term high, short-term high. So right here, it took it, and then it decided to turn around and take this one. Looks like we're melting our way down to this daily fair value gap. So we'll see. I'll watch to see how it delivers to it. What you'd want to see is these up close candles support price. So every time we retrace, it'll be something like the furthest you'd want it to go is these up close candles. can see the dollar starting to show some direction. It's kind of what helped us get out of this back and forth motion. So if you wanted to take a trade and target this daily range down here, I would want it to be within the upper 50% of where the move originated. So if we're going to say this high right here, which is also this high in the 5-minute, is where the move originated from, we would want our entries to be above 50% for high probability. So this line right here on the 1-minute. Again, it doesn't mean that it's going to come up and retrace into these, but it could hit every fair value gap on the way down. I would like this one though. If the dollar kept moving up and we kind of had a sharp pullback, possibly, because that one, you can see it lines up well with this high, low, higher high, and then we had the break. Let's see how well it lines up with it. Pretty well. So now in hindsight, you can kind of see we almost didn't enter this fair value gap just because these wicks, you can see 1, 2, 3, they were really just wicking right into this breaker. So when this candle right here closed below it, these ones are just coming right up, tapping into it. One thing you want to be cautious of too is when you see a price run happen and you're not a part of it, watch in between so when you, okay, let me figure out how to say this. When you have a price run and price is printing down closed candles, it will print up closed candles on its way down. Watch to see how long it wants to wait when printing those up close candles before returning down again, and you can start to gauge how exhausted the move is. So coming up here, this was kind of sloppy, but once we got into this 10 o'clock hour and it cleaned up and it had this, okay, down, it showed a willingness. It came down after we had one up close candle, came down with 3 candles to get to the sell side. Up close candle came down with 2, you could call it 3, but this third one didn't really make much distance. It had 2 candles that covered this distance. That was about 75% of the way to this next significant level. And now you have 1, 2, 3, 4 candles up for the next high. And then see, you had these 4 candles up, and then when it delivers again, it's taking a lot more candles to deliver a shorter distance. So again, this mean threshold is this down close candle from earlier this month. So in this case, for this order block, when I first drew that line, I included the wicks, and ICT sometimes does the wicks, sometimes he doesn't. Most of the time, it's the body of the candle. If the wicks, if it's like stubby wicks relative to the candle, so these wicks are kind of stubby, so that's why I just adjusted it to see what level it printed out. And then just kind of look to see, like, I mean, with this I moved it like 2 handles, but it's kind of just see which one price decides to behave off of, whether you're doing the wicks or the bodies. I mean, either way, that shouldn't really change too much in your narrative, because when you form a narrative, like, if you're targeting this mean threshold, if the difference is 1 to 2 handles, that shouldn't make a difference, because you're probably entering like up here. In terms of like a stop loss and a target, it could make a little bit of a difference. I would just use the more conservative one. Looks like on the 5 minute, these candle bodies are going over real well. I'm observing how when this up close candle prints on the 5 minute, the next candle came right up to its consequent encroachment perfectly. And it's always nice to see it on the 1 minute too. So, and kind of look at the difference, look at how it prints on the 1 minute. So this is that candle on the 1 minute. It came all the way up to here. And it's like, this is why me personally, I like smart money concepts, because if you saw this candle, it could look really random. And it's like, oh, well, I just measured out 50% of this wick. It stopped there to the tick. Now I have a reason behind why price just stopped and turned around at that point. And then the more you do this, kind of, in hindsight, drawing out, seeing things. For example, like I just noticed this. So this wasn't something that I was watching while we were trading. If we were in a trade, say we had entered on this fair value gap, I probably would have been a little more focused and like watching what every open, high, low, and close was doing on all three of the time frames. But since I'm more just like casually reading price right now, I just noticed it now. And then, so yeah, price came up right to 50%. But then I like to look and see, okay, how many it took another 5 minute candle. So what does that mean? That means we're all the way down here. And at one point, this is printing like, down. It's printing down right here. And then you have this retracement up. And this was just a really big white candle. And that can be kind of scary. But it's good to know that, like have this level marked out and be like, okay, so like I could expect, now that we have a new 5 minute candle forming, a 1 minute candle to retrace all the way up to there. And then it comes into the thing where you don't know how price is going to do it. It could do it in one candle and wick all the way down. It could do it in slow multiple candles with their bodies closing and then do it. Notice how, price is actually delivering pretty nicely right now. This candle, when we entered this fair value gap, it stopped right there because that was this low. So you can see they met each other perfectly. And what that did was that just immediately rebalanced on the 5 minute. So on the 5 minute, after leaving this breaker structure, we came down, came back up, went perfectly there on the 1 minute, immediate rebalance on the 5 minute, went no further, didn't even have a candle body close inside of it. So that's how you know it went up there just to close in this inefficiency. All the wick came up, the wick did the damage, the body didn't close inside this fair value gap, retraced. Well, my mouse is spazzing out. Retraced, made a low. This high came up to consequent encroachment. It's looking like all these retracements are retracing to like very intentional and specific levels, which are really nice to see. And this is kind of good back testing. And I think there is something, there's like something in between like backtesting. So if you have work and say you don't get to look at the market until after it closes, I think there's something in between that type of backtesting and then doing it live, which is kind of watching price print and seeing it maybe like only 10 minutes in hindsight. Because it's still like fresh. Like, oh, I don't know what it's going to do. So this retraced up to 50% of that consequent encroachment. And now we're having price kind of wick back and forth and deliver. We've left an inefficiency on the 5-minute. There's not much of an inefficiency on the 1-minute. We have this. Which also has a little volume imbalance right there, so include that. Yeah, seems like it definitely wants this daily for a value gap. NASDAQ's doing something really similar. You can see we had that immediate rebalance that we talked about. Doesn't look too perfect on NASDAQ. I think it's kind of like a tick shy. And remember, all this right here is happening while we have the dollar moving up. So that's good to see. So let's see if we do retrace into this zone. Let's see if it stops right at that red line. That red line would be like an immediate rebalance for the 5-minute. Okay. Not surprised with the dropping dollar. You can see in the background, dollar's coming down. Dollar's taking some new lows. And you can see it's on the hourly. It's this candle body retracing from the mean threshold. I'm gonna look at NASDAQ real quick. I want to see if NASDAQ tapped right into that volume imbalance on the weekly. Fun stuff. Let's see. Maybe if the dollar keeps dropping, we can fancy along if the dollar starts dropping below this low, I'd want to see the dollar drop below this low. I'd want to see ES get above this swing high. Well, I guess this is technically a swing high right here. I kind of want this one though, because this is like a swing high and a retracement, whereas this is a swing high just kind of in like a sloppy delivery down. Interesting. I like that. If we were to print like a fair value gap, if the next candle was to go up, I'll wait and see if it actually happens to say it. Because this could just be a deeper retracement to go lower. We don't know yet. Probably depends on what the dollar does right here. And kind of going back to watch how the delivery, how it like sputters out. So, you know, we highlighted why price opened the open high low and close for this up here. We talked about it in this right here, but these deliveries were very, you know, there were a lot of displacement. And then I said, no, watch how when price starts to kind of slow down and it takes more candles to retrace and more candles to deliver. See how many candles it took? We had a retracement here. It wasn't the prettiest. Then we had a lot of wicks coming down here. So we had this inefficiency, but it was the last one. It was, you know, 1, 2, 3. It was the fourth inefficiency in this run that's kind of sputtered out. So I highlighted, you know, this red line in this zone, but it makes sense as to why it just kind of blew right through it. And seeing it blow right through that and seeing price slow down like this all around this level. My mouse is like, I don't know. All around this significant level of the mean threshold. I want to be cautious. Like, it wouldn't be a time to enter a short. You'd need to demand a little more information to enter a long. Which is why I was saying I'd want to see, you know, it tap this. What I was going to say is I'd want to see it to think about longs. I'd want to see it respect this as an inversion and go up and form another fair value gap. And then this would have turned into a order block. And then I would have entered on that second fair value gap. But I demanded more information. We're not trying to catch a falling knife here. With the dollar is below that low now, which is it's the low of the day. So the dollar's making a new low for the day. But the dollar could also just kind of go sideways. And if the dollar's going sideways, ES still has permission to come back down and tap into this. Both setting up some pretty nice equal lows. Yeah, I think one of the reasons why I was a little hesitant to even consider taking a trade was because I didn't do my normal morning routine. I think I started this live stream like right at 10 again, and I'm not gonna touch the hot stove twice because earlier when I tried to do that, I rushed back, hopped on like right when the PM session started, and that was just some sloppy trading. Even though this was like some pretty clean delivery, like I think after we got below this sell side, I wouldn't have tried to take longs. So any entry I would have taken seemed like it would have panned out, but um, I hopped on kind of late. My normal morning routine is like I like to wake up, I go for a walk to like wake myself up because if I don't go for a walk, I will just fall back asleep on the couch. Um, then lately, I started trying to journal. Not a big journaler. I always like got really impatient anytime I tried to write and journal, and I thought, okay, well, the reason I don't like to do this is because I'm impatient about writing, like getting the thoughts from my head onto the paper. And I was like, maybe that will teach me more patience in general in my trading and in general if I just like succumb to writing and journaling. So I've been trying to do that, and I've been kind of liking it. It feels like meditating afterwards. So if you don't like meditating, I feel like I get the same feeling afterwards, where it's just like an act that forces you to slow down, and then when you come out on the other side, it feels like I don't know how to describe that feeling of like meditation. It's like you just like succumb to time, just like give away to time. Anyway, and then I usually hop on the charts, and I'm like kind of opening the market like an hour before, like around 8 o'clock, 8:30. So since I didn't do that this morning, I was telling myself also, don't be too hasty. I think it was also because I was like kind of sleepy. The reason I wake up so early is because I want enough time for my like brain to wake up. So when I'm looking at the charts, I'm not kind of foggy. Okay, so you can see price after having this retracement, it kind of, price got kind of sloppy. It dropped down, retraced, kind of, just shook it up a little. And then we started delivering a little more cleanly again. Came up there, delivered down. So again, when you see price, all this wicks back and forth, I don't know how to describe it. It's kind of fuzzy. It's very wicky. I would not. I think most people know that. It's one of the reasons why ICT uses the word displacement. He likes to look for displacement. So this is very clear delivery. It's up, down, up, down, up. It gets fuzzy. And if you see inefficiency and fuzzy price, don't. It's probably not the best inefficiency. I mean, it will get filled in. See, got filled in right here. We went upside, sell side. But it's not going to do it in a manner that's you'd want to be trading it, like entering and setting any kind of entry and stop around. But then once it cleaned up, so once we had the displacement, displaced up, displaced down, created this inefficiency, then price comes back, goes to top of it, goes to consequent encroachment of it, comes down, goes to the bottom of it. So just all three levels hit there: the high, the consequent encroachment, the bottom, down. And if you notice, prior, so at the market open, ES and NASDAQ, they were behaving in accordance. So this was the low, came up, retraced, came down. NASDAQ, didn't make a lower low. ES, it was a little higher, but it still wasn't a lower low. They both made the same. Higher high that took out this high, but didn't take out that high. ES took out this high, but didn't take out that high. And then even on their way down, they both, once they made that high, they both came down, took out a swing low, came back up, didn't take out this high, left this high in place, came down again. I guess right here you have a little bit. ES took out that swing low and NASDAQ didn't, but they're behaving very well. And then you could argue that, because ES took out this low and NASDAQ didn't, it kind of had some fuzziness right here. But then when they got to below this sell side right here, which is there on both, when they both broke below this sell side, that's when price started acting really clean. And I say all that to say, when you open the charts and NASDAQ and ES aren't dancing together, that's even more of a reason not to remember. That's like, you want to wait for times like this, because when it's in times like this, all these levels and every point it goes to and turns around, it's when the algorithm is acting very like succinctly. It's behaving nicely. So we came up, and I spent earlier in this video talking about why we turned around right here, why we stopped right here, and it happened. ES and NASDAQ, like I said, they were behaving well between 8:30 and 10, and then 10, when they finally took that liquidity at the same time, after kind of just being in between the range that I talked about, this high and this low. Once they got out of that, then the algorithm really started printing in a sell program very nicely. So it broke it right here, right? This candle is when it closed below it, and then all the delivery between this candle and still right now is pretty nice. Every high had a reason for where it stopped. This high had a reason for where it stopped. Even when it started to get a little fuzzy down here, it retraced hard, came back down, and then once it had this displacement, cleaned itself up. It displaced, then started delivering to inefficiencies very cleanly. It came down, came back up to the bottom of that, came down. Now we're printing through it. The dollar made a low of the day right here. We have 10 minutes left in this hourly candle. So I'm really curious to see how this hourly candle closes. I guess right now would be the 1050 macro. Not visibility. I'd be curious to see if we kind of run against anyone who's been trailing their stops. that would allow this candle to close above the mean threshold. I do think we're so close to this daily fair value gap, though. I'm not convinced enough to go long. If we tapped into it, even like the slightest, I would think, you know, buy stops or, you know, stop losses and buy side liquidity would be a lot more interesting to me. But being this close to this daily fair value gap, I'm gonna look at NASDAQ. NASDAQ delivered all the way to the bottom of its inefficiency. I am curiously watching the dollar. So the dollar made this low for the day right here. And if it wants to, it retraced back up. If it wants to come back down and continue lower, that story of getting buy side and all the trailed stop losses seems a lot nicer. I like it. So it looks like this hourly candle is most likely going to be closing below the mean threshold. And if it's closing below the mean threshold, I do kind of like the downside levels a little more. So downside levels would be this daily fair value gap, and then it would be these sell sides. We've already worked our way through this fair value gap a few times, which is why I think it could just getting past this order block and this mean threshold. I could expect it to kind of melt through or just go right through this daily fair value gap. You can see we've spent some time in it already. This fair value gap is from right there. Small one. I'm actually really excited about NASDAQ dropping because I have some swinging some puts for NASDAQ that I entered like right up here. So in the 10 o'clock hour, price delivered pretty nicely. Yeah, I do think if I'd gotten on at my normal time, we probably could have been a little more mentally prepared to take some trades here. If I saw this breaker, even if I didn't enter at the bottom of the breaker, I probably would have liked to enter right here. Pretty wild week. When we opened the week and we gapped up and then we ran up, I was like, shit. Because I was expecting this delivery, but it really delivered until like Wednesday. It took Wednesday and Thursday. So Monday, Tuesday, when this upside wick was forming, I was like, oh, damn. But on the weekly, I'm hoping to see more downside. We've had this long run up. We've been going up for a while. So I think we're gonna see some downside. And even on the daily, something I'll probably be looking for / expecting. So we have this balanced price range that ICT was talking about, and he did say it's going to take a lot of force to get through this and get down here. I think he implied that it will take some sort of news event, and with everything going on in the Middle East, I think the timing is making sense. So if we are expecting to get through that, I'll kind of be looking for on the daily. So you can even see us making a breaker structure on the daily. We have this high, low, higher, high. want to see it break. I think what will end up happening, I don't know if it'll be today or next week. I think we'll take these lows pretty aggressively. Now that we've kind of left this consolidation, I think we'll take these lows pretty aggressively. Maybe retrace to the bottom of this low, then send it lower. It might not even do that. It might just go pretty aggressively because, again, if we're trying to get through this balanced price range and ICT said it's going to take some force, it could be some big down close days that get us there. Yes. You know, in hindsight, it's interesting. As soon as when we were printing this candle right here, I was expecting us to enter this daily fair value gap and then leave it soon. But if you see, we spent 1, 2, 3, 4, 5, 6, about 7 days inside of it. We left it, then came back into it, then left it again. So it's interesting to do some back testing on that. The 4 hour, I think, really told the story of what's been going on the past week. So we had the run up, enter to the daily fair value gap, came down, took this high, came down, kind of bounced around, and this one took these two highs to send it lower. Once we broke below these lows, we had this breaker, high, low, higher, high. We even retraced back up into it into Thursday. So like this was Wednesday. And this is also a classic. Like this is good to watch on the daily. Well, it's like to guess the daily bias, but like see it on the 4 hour. You can see on Monday we came up. Then we retraced. Came up again. Taking sell stops, getting people thinking that we're going long. Then that was Tuesday. Then Wednesday it broke, making a new low for the week. Thursday it came back up, retraced into a premium one last time to then sell off. And then Thursday and Friday is kind of like the sell side of this weekly distribution for smart money. That's one of the reasons why when you might hear ICT or other people talk about when we reach our weekly objectives, it's better to just not do anything, because think about what's been happening. Smart money has been accumulating up here and now they're selling. So you don't want to be trying to, go short when they're offloading their shorts. Because not in this scenario, I think we take these lows. But if they're offloading shorts and you're taking on shorts, you are basically buying their exits. And what that could mean is you're also, you don't want to be buying the opposing side of smart money, because that's, in theory, that's what they do. They're to manipulate us, and they could run it back on us. So what they'll be doing is if they're selling and we're buying, to go short at this point in the distribution, they could buy and send it higher to squeeze us out, taking it into a premium again just to sell our stop losses. So they'll accumulate our stop losses and then send it lower again. It gets kind of confusing with the whole, like, you can buy, sell, and then, a sell can be bullish or bearish, depending on what you are actually buying and selling. But yeah, again, so you don't want to be kind of accumulating positions. I guess that's a good way to say it. Accumulating positions
on the distribution end of a smart money delivery, unless, you know, accumulating to go long. So there's probably some people that are see this as a good opportunity to even go long, make money to the upside. I think this price structure is interesting since we have the dollar making this new low. Dollar made a low for the day. I want to see what it does. Does it take that low? If it takes that low, I think we'll retrace onto this buy side. Maybe not all of it, but maybe some of it. Because also remember, people have been going short right here. There hasn't been like really a sweep of any liquidity yet. It's just been retracements, normal retracements to deliver. So like buy side would be resting above here, be resting above here, here. We've had a decent run on the 15, and this whole hourly candle, it's just been one hourly candle down. So remember, if, you know, price doesn't go straight to one direction, so if we wanted to reach through, you know, these lows that I was talking about, odds are you might have, it can go straight there with all down close candles, but odds are that you will have an up close print on the hourly, at least one, you know, up close candle, and then some down close candles. But think about what that's going to look like on the lower time frame. What that's going to look like on the lower time frame is running all these short-term highs and then down. But yeah, since we did close this hourly, we did close the hourly below the mean threshold of that order block, I don't think price is going to reverse on the day at all. Yeah, see the dollar. It looks like it doesn't want to mess with that low it made. Nice. That was fun. Never stayed on past 11, but it was kind of enjoyable because watching price print in a very, I mean, it was we were kind of going over it in hindsight, but watching price deliver in an algorithmic way was fun. Because I feel like earlier this week, just up until Powell spoke, price wasn't making too much sense for a lot of the days. And that's super draining to like watch. And And it's, being able to identify times like this that helps you identify low probability conditions in like earlier this week. And it always usually lines up with like something. It always lines up with something, and ICT is, outlined that for us. If it's CPI, Powell speaking the day after a bank holiday, he's kind of outlined when price shouldn't behave the way it is. But then if you pay a lot of attention to when, on days like today, when price is printing like very algorithmically and all the pullbacks are going to specific levels, you'll start to see it. And then on the days where it's not there, I feel like there's a little gap in this learning curve where it's really it's a struggle, because on the days it's not there, at first you think, oh, am I wrong? Am I not, like, do I not understand the concepts enough? But what's really happening is it's not even listening to the concepts. And there are certain times too, even myself, where I'm like, well, I'll say that to myself. I'm like, oh, damn, like, I actually don't have a good read on a day where I'm expecting price to not deliver cleanly. But then there are certain times where you'll realize, like, okay, like if it just did this, it has to do this. And it just doesn't. And that's when you're like, this is not tradable. So since price was delivering nicely in the morning, I will try and be on in the afternoon. I think if I do come on though, there's a chance I might not stay on the whole time, just because, again, we are on the distribution end of this week for smart money, where they're offloading positions. It's a Friday afternoon, so we'll see if there's any clear setups. Something that might be nice is, if between now and like 2, price prints a nice range that we can outline the lunch high and low as some liquidity targets. That would be nice into the PM session. I think this happened a few times earlier this week, where, we printed a lunch range, and then between 1 and 2, price just completely ran the sell side and the buy side. And then going into the 2 o'clock hour, you're like, oh, okay, well, I don't see any clear liquidity. And that was kind of sucky. I feel like it's been doing that a lot in the 1 o'clock hour. I've burned myself a decent amount of times. I just haven't really been able to find success trading like the 1 to 2 hour. So I'm very happy with just never touching it. I've found success after 2. I have not been able to find success between 1 and 2. So I don't even touch it. And it's not even like a specific time frame that ICT highlights either. I've seen him take trades at like 1:30. I know he's said before too. He's like, I feel like he never kind of elaborated on this, but a long time ago, earlier in this year, he was like, watch at 1:30. He was like, something happens at 1:30 every day. And a lot of times there is like a pretty significant like low or high that forms at 1:30. But he's hinted at the idea of like between 12 and like 1, that's the lunch hour, and between 1 and 130, like still don't even try and trade between 1 and 130. And then after he said that, I was like, trying to trade between 130 and 2, and I just could never find success in it. But yeah, so that's what I'll be looking for in the afternoon. I'll be looking for, I'll be hoping that price forms some nice either equal highs, or just a range between now and then, and we can use those as targets for the PM session. Enjoy the rest of your day, guys.